Hey, how you doing? Welcome back. Welcome to another week. Welcome to the first full week of 2019.
How you doing?
How you doing, man?
How you doing?
How you doing? Look at, you know what these are?
You know what? You should come in wearing a rabbit outfit, and you should be
Ever Ready Bunny?
Yeah.
Now, I've got a drum kit back here.
No, you'd be the Never Ready Bunny.
I'd be
the Never Ready Bunny.
Never Ready. Ooh, I have a drum kit back here. I'm gonna start playing it every show.
You could be the drum kid with the drum kit.
Kid would be a bit of a stretch. The drum old fart.
Oh.
Actually, we got congas, we got djembes. We're gonna have drum circles from now on, no more meetings, just drum circles. It's exciting, isn't it?
Yeah.
You know, we have a really big show today.
Big show.
For a Monday, it's quite the elaborate affair.
Really?
Yeah. It's
what do you know?
Well, Liz West, who sounds like she might be married to me, but she's not.
Yeah.
And she's gonna read the news.
Yeah.
Then
we got the Liz with the blonde hair reading the news, and we got Ricky with the dark hair reading the news. We got sort of black and white.
We got the news. We got you covered. Then at 3:15, Alan Brochstein's going to be here to talk about this, that, and the other thing. We're going to talk about Tilray and the imminent share release that's coming up. We're going to talk about why the market is so green today. It's not that easy being green. Can't resist whenever that comes up. Brent Zettl is going to be here. Do you remember who Brent Zettl is? Brent Zettl is actually Canada's original cannabis entrepreneur on the legal side. He actually was growing dope back in the 80s for the government of Canada on the research side. Really? He was the only company that was supplying cannabis for the MMAR regime, which went from 2002 to 2013 when we launched the MMPR, then the ACMPR. Then we have a little bit of water cooler conversation for you. We're going to reveal the mysteries of short selling. And that is going to be pretty good. Wow. Then, of course, the market will close. Ed and I will shake our heads like this and go, dang, 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 dang. Afzal Hasan is going to be here.
We got his name written there wrong.
We do, but that's okay. I know Afzal. I won't say his name wrong. From Origin House. He's the president of Origin House. Him and Mark Lustig and Afzal run Origin House, which used to be Canada Royalty. And they're going to talk about some of the takeout offers that they've turned down in the last little while. Really? Really? Are they? Yes. Yeah. Yes, and then we're going to have a question of the day. And then tomorrow Cam Battley's going to be here on the set. Yeah. And we're going to publish our latest video from Aurora Sky. And that is going to be spectacular. Now here's the news.
Thanks, and here's your news that's moving markets. iAnthus Capital Holdings Inc. has opened its first dispensary in New York. The doors opened on December 30th, 2018, my birthday. The dispensary is the first in Brooklyn, which has a population of roughly 2.6 million very cool people. It will operate under iAnthus's New York dispensary brand, Citiva. This is the first of Citiva's 4 licensed dispensaries. Others include Wappingers Falls, Staten Island, and Chemung County. AgraFlora Organics International Inc. announced that it has engaged Good Manufacturing Practices facility experts to design post-production exports for the European Union. This is in preparation for the first crop of cannabis to be planted at its large-scale Delta greenhouse complex later this year. The company has also initiated discussions regarding supply agreements and product development partnerships with several European Union-based pharma companies. Aleafia Health Inc. has completed Phase 1 construction and retrofitting of its Niagara greenhouse facility located in Grimsby, Ontario. The company expects to complete Phase 2 on the balance of the facility in late Q1 or early Q2 2019. Pending Health Canada approval, the first Niagara crop is expected to begin in the next 60 days. Aleafia will have multiple avenues to distribute the cannabis produced at Niagara, including leveraging its 15,000 kilogram 2019 supply agreement with CannTrust Holdings Inc. in the near term. Upon the closing of the company's previously announced acquisition of Emblem Corp., Aleafia expects to leverage Emblem's production capabilities. Curaleaf Holdings Inc. today announced the opening of Titusville's first medical marijuana dispensary, bringing the number of Curaleaf dispensaries in the state of Florida to 20. Curaleaf has the largest cannabis dispensary footprint in the U.S., with 38 dispensaries across the country. Viridium Pacific Group Ltd. announced it's entered into an amalgamation agreement with EFX Laboratories Inc. EFX has developed several proprietary formulations for pain control, as well as a suite of value-added wellness products. And Neptune Wellness Solutions Inc. has announced that it has received its license to process cannabis from Health Canada. The Health Canada license enables Neptune to handle dried cannabis, to manufacture and purify cannabis extracts and cannabis oil, and to sell its services to other license holders. Origin House announced that shareholders representing approximately 26% of the common shares of the company on a fully diluted basis have entered into voluntary voting support agreements with the company. This is in support of its vision, strategic direction, and business plan. In recent months, Origin House has been approached by several public cannabis companies contemplating stock-based offers to acquire the company, they believe failing to recognize the long-term value of Origin House. In the estimation of management, there is a growing risk of hostile takeover activity with respect to the company's shares. Green Thumb Industries Inc. announced today that it has signed a definitive agreement to acquire Advanced Grow Labs LLC and enter the Connecticut market. AGL is one of only 4 companies in Connecticut licensed to grow and process cannabis. The Connecticut-based cannabis company operates a 41,000 square foot manufacturing facility in West Haven with the potential to expand. AGL has a 46% ownership of a recently awarded dispensary that will be located in Westport, which makes it the only vertically licensed company in the state. Nutritional High International announced that it has entered into an agreement with Docklight LLC of Seattle, Washington, to license a number of well-known brands. These include the Marley Natural brand for use in connection with inhalable cannabis products in Washington and Oregon. Marley Natural, the official cannabis brand of Bob Marley, offers a comprehensive line of products including cannabis, body care, and accessories. High Park Holdings Ltd., a wholly owned subsidiary of Tilray Inc., announced today that it has received a standard processing license under the Cannabis Act to process cannabis into finished branded products at its state-of-the-art facility located in London, Ontario. And International Cannabrands Inc. announced that it has completed the second closing event to acquire a 51% equity interest in La Vida Verde Inc. La Vida Verde is a highly respected branded cannabis product manufacturer and distributor based in Santa Cruz, California. And Pharmaceutics International Inc. released today that it has commenced a research and development program of pharmaceutical cannabidiol-based products. The company believes that its current technology platforms could find use in cannabidiol therapeutics. It has filed provisional patent applications with the U.S. Patent and Trademark Office pertaining to the delivery and application of cannabinoid-based therapeutics. Invictus MD Strategies Corp. has entered into a binding letter of intent to create a joint venture with Can America Brands Corp. and CB Distribution Company Limited. Its intention is to acquire hemp biomass for extraction into CBD isolate using purpose-built facilities for large-scale CBD extraction. Subject to board approval and completion of satisfactory due diligence, Invictus intends to enter into a definitive joint venture agreement on or before January 31st, 2019. Each of the parties will receive a 1/3 share of the joint venture in exchange for their respective contribution. And that, folks, is your news for today.
Lots of news.
Good news, bad news, bad news, good news. It was interesting to see Juju in the news there. Juju, the chart it's rolling out like this at a little higher level than the last time it did it. Now, did you notice that Nutritional High was making some big hay about carrying Marley Naturals?
Yeah, I did.
And then I saw another press release from Tilray.
Everybody is.
Announcing that they were carrying Marley Naturals. And then the International Juju, Canada Brands there, comes out and they've got Juju Royale, which is Julian Marley. That Marley family's really cashing in on the cannabis craze, aren't they?
Marley. Maybe they should change it to money.
Money. Maybe they should just change it to Rastaman. Rasta.
So did you have any cocktails on the weekend? Just curious.
I drank enough to float a battleship.
Negroni?
We started with Negronis. And then I drank some red wine.
What's the price point on a Negroni in a reasonable bar? I don't mean like a dive, but
well, $12. It's all booze.
Steep.
It's high end. This is the shit the royals drink.
Really?
We could be royals.
Yeah. I was sitting in line at the grocery store and I noticed the new princess there that married recently. And
what, some princess got married on the weekend?
From Toronto. No, you know the one that Marley, or her name's Marley too, isn't it? Merkel or Meghan Markle?
Meghan Merkley.
So
Markley Meghan.
See what? Apparently, it's written.
Oh, she's right. She married the Willie.
Yeah, she wants her old life back. She says that this is.
Really? Okay, I've had enough caviar and fabulous.
Yeah, tabloid. She says,
What? Oh, yeah. Hand of God here. The voice of God wants us to get to Alan Brochstein. What? You don't like us talking about the royals there, huh?
Well,
got a little problem with that there, God?
But they're probably from Ireland.
Ah. Well, she's Canadian, though?
No, but the point is, there's always this, the Irish and the British have this,
Oh, the Irish don't like the British.
Well, I don't know.
The British don't like the Irish.
Well, they're different.
Well, they're not really different. They think they're different.
No, everybody thinks they're different. Everybody thinks they're different, but the bottom line is,
everybody thinks they're special.
We're all the same. The only thing, there's two, actually, women are different than men. That much we know.
There's little to argue with there.
Yeah.
Physically, mentally, emotionally, you name it. Any which way there is to be different.
Hunter-gatherers versus...
Yellers and screamers.
Hunters.
I'm going to get royal shit for that. Anyways, there's nothing. I'm joking. No. I'm joking. Maybe in poor taste, but that's all I'm guilty of.
You're just joking. You're just
joking around.
Jokester.
Just a joke time Charlie here.
The Joker went wild.
Boy, the voice of God.
Okay, the voice
of God. I'll have you note that the clock says 3:13. The schedule says 3:15. Brochstein's in 2 minutes. Correct me if I'm wrong. You're right. It's at 3:12. We're 2 minutes overboard with the Brochstein. Hey, Alan, what's going on? Here's Alan Brochstein from 420. Hey, Alan, how are you today?
Hey, it's great to be back again.
You bet. Alan, let's start with an overview. I mean, the market's looking pretty good in cannabis here going into Q1 2019. All of the stocks that are trading in Canada that are U.S. operators in particular seem to be very positive today. Do you have any insight as to why that might be?
Well, I mean, I think people like that GTI acquisition today, getting into Connecticut, and I think for the overall market, it's a reminder that there's a lot of growth ahead. And I add to that as well, Orgin House, which used to be Canna Royalty, talking about receiving takeover bids, and I had heard some of that, by the way, and. So I think those things kind of, set the tone for optimism here in the United States. And remember, the end of the year was just horrible for these companies. A lot of them came public. Like, look at Acreage. I know people are very excited about Acreage. It comes out at 25. That's 25 US. And then it drops 50%, and now it's back. And so we're seeing a lot of that. I think people are getting a little bit more comfortable with the calendar flip, that some of the selling at the end of the year should be over. Mm-hmm. I think that's what's going on.
So do you think it's potentially likely that a lot of these Q4 IPOs that came out and promptly underperformed are likely to deliver some good performance in Q1 2019?
I think so, and I think what's going to make this year work or not work for them is just to show big growth. We already know there's going to be big growth among some of the leading Canadian LPs, but just because of legalization and what that means for their revenue ramp. But we have some pretty sexy revenue stories here in the United States, and I think your audience needs to understand things are different. Canada, there's really three markets. There's the medical market there, which is getting pretty mature. There's the new adult use market, which is just taking off, but nobody has supply. And then, of course, there's the global market, mainly Germany, but other places as well. Well, here in the United States, it's multiple markets. We're coming off of a really rough year in California, and so things are probably going to pick up there now that these regulatory issues have been addressed for the most part, or understood better. But we also have a bunch of states ramping up, and I mentioned GTI earlier. And Harvest is another one I would mention. These companies are just snagging new licenses in Pennsylvania, for instance, and other states as well. So there's going to be a lot of state-by-state growth. And so we have that kind of organic growth where they win licenses. Then there's also the M&A aspect. We're seeing a lot of M&A. The MPX iAnthus deal should close, I think, later this month. And then there's also, up in Canada, a couple of SPACs that were done. They trade on the NEO of all places, which has not been a very great place to trade. But there's two SPACs. One of them is buying Columbia Care, and the other one's buying 5 different companies. And these companies have big revenue, positive EBITDA. So I think it's going to be a great year for people focused on both sides of the border.
Mm-hmm. Sure. Do you think that the U.S. is going to be a little bit more, let's just call it a little bit more effusive in terms of share price appreciation relative to the likelihood of that happening for the Canadian LPs, who are obviously dealing with a much more mature environment and a more competitive sort of backdrop?
I think Canada is going to do all right, but if I had to pick one over the other, I've been saying for a while, so nothing new there, that the U.S. is, and the big difference has become the ability to raise capital that just hasn't been there before. And so better liquidity, we're seeing, so it used to be nobody would want to play with an OTC ticker. Nobody, when I say nobody, it was just for retail investors and not really for family offices or anything like that. And now we're seeing huge volumes in some of these CSE-listed MSOs, multi-state operators, and we're seeing the volumes sometimes bigger on the OTC as well. So we have capital raising and better liquidity, and I think the valuations are a lot better. And just as a reminder, like I always say, in Canada, you can sleep well at night. You don't have to worry about the Attorney General knocking on your door like we do here, potentially. I don't think there's going to be any issues, but you should always be aware of that risk. And because of that, there's going to be a valuation gap. But I've been saying for a while, this valuation gap is way too low, too big on the gap. You
mean the discount of U.S. operating Canadian listed companies relative to Canadian okay. It seems to me that, if you looked at the OTC volumes increasing, the increasing availability of cash and private placements going into U.S. MSOs, it would seem to me that the issue with the Attorney General knocking on your door at night is becoming more and more a thing of the past. And, obviously the largest, oldest capital pools are still very much on the sidelines, but it seems that the sort of the mid-market is coming further down into the cannabis space to the point where, is it just a matter of time till Canada loses its sort of monopoly on financing these companies? Well, when you say on financing them, there's not a lot of U.S. financing going on. It's all going through Canada, if that's what you mean. Yeah, well, there's a lot. We're not seeing any investment banks here raise money. Okay, well, except for a couple in the case of, for example, Cowan and Company, and some of the... Not for U.S. companies. There's no investment banking, unfortunately. Really? Cowan's working with Tilray and Canopy, and those are Canadian companies. Cowan's not touching the U.S. really. Okay. Okay, interesting. So then, in terms of the institutional... the Bay Street Boys are fine. Well, they'll be happy to hear that. So then, you think that the investment banking side is going to remain very much a Canadian opportunity and a Canadian game at this point going into 2019?
Oh yeah, I don't think that's going to change until we get some sort of legislative change that makes these conservative institutions in the United States really crystal clear that they can do this. And right now, that's not the case. And so there was actually a U.S. investment bank that was building a research team, and they just ditched it. And it's really, I know Cowen, and they're here, and they're doing a great job, but they're not doing the banking for U.S. companies.
Mm-hmm. Okay. In terms of private family offices, they seem to be wading more into the fray in the U.S. side. Like the Schottenstein family we saw is in there, and is that something that we can read into the sort of future going forward, that the lack of a federal framework does not necessarily preclude the participation of larger capital interests in the United States at this point? That's
a good point. I think that's definitely going on. I think one of the interesting things about cannabis is, unlike Bitcoin or something like that, people can relate to it, whether they're adult use consumers themselves, not as likely, but everybody probably knows somebody that's really benefited from medical cannabis. And, unfortunately, it's still murky with the new, hemp is legal, but what the heck is CBD? It's to be determined. I think this has been a very frustrating improvement for everybody, that there's no improvement yet. But to the extent we see more proliferation of CBD, and we're going to see that through GW Pharma and Epidiolex as one example, but this is a very fast-growing area, so it's getting harder and harder for people not to be aware, not to be touched in their lives by at least a few examples of people who have really benefited from medical cannabis. I hear from people all the time. I guess everybody knows what I do, and so that's what they talk about. And I'm always hearing these anecdotal stories, and I think that helps. There's a lot of mission-driven investing going on among some of these larger family office types. We've seen, there's a woman in Philadelphia, Lindy Snyder, and her father owned, I think, the Philadelphia Flyers, if I'm not mistaken, the Snyder family from, I think, Comcast. I might be wrong about that part, but the point is that was a little bit mission driven. And we see that sometimes in CEOs like Jeanette Vandermeerel of co-CEO at 48 North now. And we see it in the investors too, James, where people can really relate. They have a personal story, or they know of somebody that has a very personal story where they've benefited from medical cannabis.
Right. Yeah, well, that I've got to say that's become almost background noise in my universe. Every day somebody's telling me a story about somebody, aunts, uncles, cousins, nephews, returning vets, etc. Changing gears a bit here now, let's talk a bit about Tilray. Tilray's got some stock coming free trading in the near future here, and we can kind of see that it's struggling here in the $70 a share range. Is that because there's this perceived overhang in Tilray shares coming to the market?
Yeah, I think so. And I think, when that stock came out, I liked the company. I still like the company. And I thought it was, maybe a little expensive. But I said at the time, this company checks every box. And since then, they've probably checked more boxes or gone a little bit deeper. Obviously, they have a partnership with Anheuser-Busch's parent, AB InBev. So there's been, positive developments, I'd say, for the most part. And they're one of the larger revenue generators. But the stock should never have been at 300. It never should have been at 200. And it probably never should have been at 100. So I think it needs to find its equilibrium. And, there's a real disadvantage to having your stock be too expensive, because you won't be able to do deals. You won't be able to get people to take your stock. And I think, Tilray may be encumbered a little bit by that. But just so everybody understands, this is not a ton of stock. That company trades a couple million shares a day on average, sometimes as little as 1 million, sometimes 3 million. And the unlock is, I believe, 7.2 million shares or something like that. Plus, that's from a $7 and change financing round from about a year ago, a little bit less than a year ago. But plus, there's other shares that will come unlocked. Privateer Holdings, I don't think will be selling any stock, but there may be some distributions, and those people could sell. We'll see. But these types of events, people pick up on it. They usually sell the stock in advance. So usually the best time to buy an unlock is like the day before. It's really weird. I don't know if you watch that, but everybody's always afraid of these unlocks, and the stocks will sell off in advance, and then they seem to find their equilibrium.
Right. So in your estimation, is Tilray at roughly, call it $70 a share, fairly valued, or is that still a bit expensive in your estimation?
I don't think so.
No? Okay. Yeah, sure.
Well, look, I want to be really humble about this because, I think it's hard to value these companies. And, you can look at things like forward revenue projections by analysts. And if you do that, then you're going to say it's really expensive, and you would turn to some of the other peers, right? It's just the market cap is way higher than the projected revenue compared to its other peers. For example, there's a lot of things that we don't know. Like if you were trying to do the analysis of is canopy growth expensive a year ago, you would have said, well, they have this little investment by Constellation. You could say that might, materialize into something else. Well, lo and behold, Constellation puts a ton of money into the company and takes control over it. So things change. And just like Tilray, like I thought Tilray was okay at 20, and then it should have gone up after August 14th when the market started to take off. And they have a partnership but they didn't get any equity investment or anything like that. So I think the number is lower, but I don't know if and when it gets there. And I will say this, that I'm pretty confident that that company can grow into this valuation over time. I don't think it should be here today.
Right. Okay, great. Do you see any other companies out there that you could refer to, Alan, as being a bit of a discount at this point for investors that they might be able to take advantage of?
Yeah, there's a bunch of them. I think, so I came into the year kind of with the thesis that kind of in the middle, some of these stocks were beaten up. It's kind of the baby in the bathwater syndrome, and some of the smaller ones too. I think it's going to be hard for investors to wade through. If you take out the top 3 or 4 of the 46 LPs that trade publicly, so you're left with 42 companies, trying to really get a good handle on all of them, that's my job, and I have a hard time with it. So I think it makes sense that there's going to be some oversights by investors, and without naming names, that's where I'm kind of focused in my model portfolios and some of those medium companies. And, I think I said last week, I see the potential for some of them to maybe merge into U.S. companies, and that's kind of a new idea. There's also, we've seen some of these companies do consolidation. Canna Farms was acquired by Vivo, that used to be Abcan. We've seen, so a year ago, Afria bought Broken Coast. So we've seen some M&A. More recently, Emblem announced it was going to merge with Aleafia. I don't know if that deal will go through, but so we could start to see some consolidation. I think the problem is many of these companies, nobody wants them. So I'm not going to tell you which ones, but we could see some of these companies stay cheap for a while. But I'd like to see, to me, it's disappointing. A lot of these companies have been around since 2014 with their licenses. I'll pick on one, Emerald. And their revenue is just like nothing. Like, what have they been doing the last 4 years? It's almost 5 years. So I don't want to pick on just them. There's a bunch of companies like this. And I think that some of these companies are really facing an existential crisis, and they need to. And so Emerald, they've already hitched themselves to Village Farms, so they're not in that existential crisis. But some of these other guys that have been around for a while, maybe they need to give up on Canada and just focus on Germany. I don't know. There's definitely an existential crisis.
Interesting. Well, that makes 2019 a great year, in terms of excitement. And also, I guess this is the year that the Canadian companies are really going to start to be valued on their balance sheets, isn't it? Yeah,
well, I think this is going to be the year where we see positive cash flow. That's been another frustrating thing for a lot of investors. Not so much for me, but the extent of the cash burns have been problematic. I don't mind seeing young companies be aggressive in their spending, in front of growth prospects. But this is the year, and we need to see this week AFRIA reports. I would say we need to see some good cash flow generation there. If they're telling, it's not them. If people are going to say, well, AFRIA, and I will say this too, if AFRIA can stand on just Canada, well, they better start getting some better financial performance out of Canada. I think they will. But this is going to be a year where a lot of these companies, they need to start showing smaller cash burns or move into cash flow generation, or they're going to lose their institutional investors.
Yeah. Well, AFRIA is projecting roughly $40 million in top-line revenue this quarter?
Well, the analysts are, correct.
Yeah. Do you think that...
nobody ever seems to hit their numbers, but this is... If they had the inventory and it looked like they did, it seems like they will because there's such a shortage right now.
Sure. All right, Alan, let's leave it there for now. We'll come back to you soon. Thanks very much for joining me today. Well, look at that, eh? What do you think, Ed? Buy Tilray, sell Tilray, ignore Tilray. You know, the people on the chat room here are talking about this company called Yield Growth Corp, which has gone up. It's been basically a double in the last week on pretty good volume. And so I thought I'd do a little due dilly on it, and I'm looking at it, and it's got who's behind it? Penny Green. Penny Green from Glance Technologies, who, was...
get up and go.
Was let's just say left a bad taste in some investors' mouths, and so now she's got herself a cannabis deal.
Well, let's just see how Get has performed here.
Get? No, the symbol's boss. Oh, you mean the
what is the symbol?
Of Glance Technologies?
No, the other one.
This one is BOSS, B-O-S-S on the CSE. It looks good. I mean, the stock looks good. It's got a relatively tight float, but
it's been trading now for. Oh yeah, look at this. Went down to 15 cents now.
She's the president.
40. Yeah. Well, she seems to be able to.
She's a hustler. We should give her a call. Penny Green, if somebody watching knows you, tell her to get your ass in here. Let's have a chat. Come on, Penny, get in here. We won't talk about Glance.
Penny for your thoughts.
Penny for your thoughts. There you go. No, but we'd love to hear about yield growth, and sounds interesting.
Want $1?
So the chairman, Tom Bond, was with MAC Cosmetics from '93 until it was bought by Estee Lauder in '99. That's promising, yeah. So who knows? You know, there are some deals out there. I mean, at least it's starting in the right price point. Let's see, what other companies can we talk about that...
How many shares in this little baby here in the boss?
70 million, something like that. Let's see, hold on, that's not right. One sec, I'll find out. Let's go CEDAR, yield growth. Yield Growth Corp, CEDAR. This is live due diligence here by Ed and Jim, right? News.
Volume outstanding, yeah. Market cap, 78 million shares outstanding.
Whoa!
You were pretty close, $30 million. There you go. Yeah.
Yield Growth engages in Canco Cannabis to apply for cannabis processing and sales license. So, interesting. So I guess now, Penny we've seen, if you look at the chart on that Glance Technologies, that had quite the run.
Well, I actually was shorting that thing at around $2, and I think it went to $4.
While you were shorting it?
Well, it really had a spectacular move, but it was the top. It's just that, once again.
I think I'm going to buy some of this, boss, right now, just for laughs. Don't try this at home. This is money that I can afford to lose. Yeah, like there's such a thing.
Glance Technologies, 21 cents.
Yeah, 21 cents.
Glances.
Oh, Glance is 21 cents.
Yeah.
Well, so, things have their day in the sun, and then they have their day in the shade. And it's time to run away.
Yeah, hit 370 Glance. My God. My God. Oh, well.
Yield Growth Corp.
So, yeah, I noticed, like I looked at another one with big shares outstanding, HUGE.
HUGE.
Huge. FSD Biopharma.
FSD Pharma.
Yeah. 12 or 14 million shares traded today, up 2 cents.
Oh, yeah?
I mean, that's a lot of volume, but there's a lot of shares outstanding. I think there's more trading going on now than there was. You know, like there's people that are flipping things for pennies now. Mm-hmm. You get that sense?
Yeah.
What are you thinking?
I'm thinking I'm going to buy some Penny's shares here.
Penny shares.
Penny shares. I'm going to buy some penny stock here.
Buy some penny stock.
Yield Growth Corp. Here we go.
Here, buy some penny stock.
Put in an order.
What?
10,000 shares.
10,000? What are you going to do? Try and flip it for a penny?
Ah, well, you know. This way, if I got some skin in the game, I'll be able to have a ringside seat and I'll be watching what's going on because I got money in there. A little bit, but you know.
Why go so heavy? Why go heavy? Why go so heavy?
Well, I want to get
buy 100 shares.
100 shares. 100 shares. That'll be like $47.
Yeah.
Geez, that's a lot of money. No, you know, if it's now I got something, a reason to watch it, and who knows? Maybe this thing's the next $10 cannabis.
Yeah.
You never know.
Yeah.
You never know. But if it does half of what
Namaste's up big. Yeah, well.
Namaste's up big, yeah. Unity?
What's your point?
Why Namaste's up big, yeah. That's true. You know, I think I'm going to talk to you. You know who Brent Zettl is?
No, I don't.
So Brent Zettl started Canamed, which was Prairie Plant Systems, which was actually the company that grew cannabis, was the only company that was growing cannabis legally for the Canadian government back in 2002. He took Prairie Plant Systems, which was growing in an old copper mine in Manitoba. They got the boot in 2005 because the price of copper went up, and they needed the copper mine back because the copper was more expensive than the weed was, and they couldn't sell much weed. Fast forward to 2013, it becomes Canamed, gets into a hostile takeover situation with Aurora. Now Aurora's got it, Brent's out, and here's what he's doing next. Brent, welcome back.
Thank you.
So you're getting ready to do this whole big public company thing again with your new project called ZYUS Life Sciences. Tell us a bit about that, please.
Sure. We started the company actually in April of 2018, initially under a different name, and went through a rebranding exercise and decided that we thought that the ZYUS would be the appropriate name, given the origins of it are from the zygote, which is the beginnings of life, the cell divisions, and then us from a greater societal endeavor. And so our ambitions are really, when we step back and look at it, we're really trying to advance the science of well-being in order to make life more livable. And so in doing that, we're focused in on the phytotherapeutics. It's a category that we're talking about as plant-based medicines, essentially. And we're using cannabinoids as the basis to start that, or cannabinoid-based formulations as the basis. So to that effect, what we did is we acquired a ethanol extraction facility that can become a GMP-rated facility on scale. It'll have the ability to produce 35 million bottles of cannabis oil a year equivalent, and then be able to move into the international markets in this space as we see the next generation of products coming out in the medical field.
Okay, so starting off with, I guess, primarily CBD products in extracts?
No, I think we're going to, it'll be focused on THC and CBD complement products.
So you'll be a licensed producer
Licensed producer, that's the intention.
Sure.
And in oils, capsules, and in topicals.
Okay.
Focus on those. And then we're targeting a series of countries. Our footprint is in around 20 countries that we're already speaking with. And then we're looking at about 1.1 billion people in terms of our reach.
I see. So your background is deeply scientific. You're the founder of Prairie Plant Systems, the first company in Canada really to be involved in the medical marijuana space. And that evolved into Canamed, etc. So I look at this this initial sort of 4-pager on Zymed, and I think, okay, well that's got to be the starting point. I would think, given your depth and breadth of exposure to the molecular array of all cannabinoids, that is there a plan to evolve sort of FDA and Health Canada approved drugs from cannabinoids?
Yeah, exactly. So we're going to start by basically purchasing product through a series of onboarding systems and way that we can bring in product to ZYUS. That would be buying the product, de-risking a little bit to the investors, but also making it available to our patients through a onboarding process that sets the standards. And then create the products from the ethanol extraction that would be derivative based. So it would be oils, capsules, and topicals. And the idea behind that science is that we want to use the formulations to drive what their application could be. So we're trying to help change the dialogue and the paradigm in medicine a little bit. That's what our ambitions are. When we look at it, we're trying to reimagine the potential of medicine. Looking at it from a point of view of saying, you know, the phytotherapeutics and cannabinoids in particular, when we were working with it, really have an ability to open up that dialogue because it's a complex system that requires at least 2 of the cannabinoids to be effective in this complex natural system that we have, the endocannabinoid system. So the science really has to drive the new chapters, the new opportunities and the new revealings of how these things can be harnessed in a way that benefits us, because the suffering is still fairly strong. Right? A third of every, you know, in the United States, it's a good example, a third of all Americans are suffering from chronic pain or acute pain, a third.
Is that because of the president there?
Well, I won't go there, but the extrapolation, I mean, we have the same thing in this country. So the point is that there still is an unmet need, an unmet need even in that and of itself. And well, with the previous company, what I learned in the process is that there's 168 conditions that our products were being prescribed for. But it's a long journey to go from when we were first assigned the project in 2000, December of 2000, and then transfer all the way through the plant sciences and the development and the Health Canada years of trying to get the product in the hands of patients and trying to work through all that stuff and trying to convince doctors that it was okay, it wasn't going to kill anybody, et cetera, et cetera. Then to moving into now, we're really starting on the onboarding to say, we see the rest of the world coming where Canada was in 2003, and which, you know, we still see the value in this, where the cannabinoid-based formulations are going to really find their place between the analgesics such as the ibuprofens of the world and the opiates, and that's what's going to open up that dimension for us.
The understanding of exactly what conditions the various cannabinoids are indicated for are still suffer from what could best be described as an absolute dearth of clinical data in terms of the absence of research as a result of years of prohibition, etc. Is it still what you would consider in its infancy, the clinical research phase of cannabinoids in terms of human medicine?
Absolutely, it's in its infancy because we don't have the strong data set of any condition yet to support that. We started with clinicals when we were with the herbals and slowly moving into oils, but we're early days in understanding it. And it's not just a single drug for a single condition. It seems to be at least a complement of 2 cannabinoids, at least 2 cannabinoids working in concert in varying ratios for the condition. So it's more complex on top of it, layered on top of that, right?
Sure.
So the science has to really drive that agenda. The formulation work, we're just babies in understanding what that's going to be. So that's where I think the real opportunity is. Now, we had to sort of declare side effects, so the worst case scenario. What's the first side effect that we had to deal with? The people get a better sleep. Yes. You know, so I mean, that's still considered a side effect. But so we're still looking at all the science pieces of this. That's really what gives rise to the opportunities. Like, beyond the adult use market, we're saying, and there was a reason why it was available for human beings, and they use it for 4,000 years so far. And it has to do with managing symptoms as we get older. And I think we just have to, you know, reveal that more statistically through clinical trials and through letting science drive the agenda of what we think the formulations will be. And that's what gives rise to the opportunity and, of course, the need. And back at ZYUS, I mean, I have the team, you know, a lot of members from the original Cannabis came across, about 35 of them came across, and now they're with us, and we have a single-minded purpose and a culture that's committed to making it patient-centric with a patient focus, with an embracement of science to drive the agenda going forward. And we really think that that's going to be where, you know, patients are going to benefit from this in the future, and, you know, from the work. And one of the reasons why I started up again is because the mission wasn't over. We were just getting started. We're just moving from the plant-based sciences to how this is now relevant to a human being. We're just getting started in that process. So I think we're early days in the scientific side.
Sure. So ZYUS at this point is a private company?
It's a privately held company. Privately held, we did the first round of financing for $25 million that we closed in October. And then we're looking at going into the public markets later in 2019. For what reasons? For basically so that we could have resources available for doing clinical trials, because they're expensive, and for looking at, you know, all the educational components, and for doing CapEx as we make this into a much larger company on a global scale as we start to reach out to those other markets.
Okay, so then how soon till we see ZYUS products available in Canada?
That's a good question. Actually, we have in the plant, we have a pilot plant that we're going to have completed that'll allow us to make 500,000 bottles of oil a year, completed by the end of March is our target. And so we're going to commission it in Q2 of 19. So by the end of Q2 of 19, we're hoping to have, it'll be fully licensed and getting products into market in Canada. That's kind of our target. But the caveat, of course, is we have to go through the licensing process, which we're midway through, and you know, it's because of the plethora of licensed applicants. It's a bit more taxing on Health Canada. So that's the only caveat. We have to make sure we're licensed.
Sure,
So.
sure. Just an interesting question that I'm sure I'm not the only one thinking this, but what have you learned from your previous incarnation with CanAmed that you are taking forward into ZYUS that constitutes a different approach to doing things for the betterment of your shareholders?
I think the key thing here is on the board of directors, actually. Like, our last board of directors first was too large. And as a consequence, and we had this culture of taking our time opining over things, that with too much due diligence, it took too long. Like, not that too much due diligence, but take too long to do the due diligence, to get comfortable with the situation. I think as a board, it has to move quicker in making decisions with the information to it. So a smaller board will help with that, number one. Having a board that's more proactive in helping to make sure that we get there, that we don't have, time is not our friend when we're in a publicly traded company. And then also making sure that the people that we select for there have a separate agenda. I mean, we had fund individuals or directors from other funds, and they had a separate agenda clearly than thinking of the overall benefit for the company going forward. And so we want to make sure that we have people who are aligned with our values and everything else that goes with that culture and developing it to really create the value that where it properly could be achieved and where it's fully manifested in its full regalia. That's where we want to be.
Do you see ZYUS evolving into becoming a actual cannabis grower and producer, or do you think there's sufficient supply in the system now that you'll be able to access the ingredients you need to create the compounds you're targeting?
Yeah, our target is, our goal is really to set the specifications and then to buy the product from the licensed producers. There's 3 times the amount of product available in this country, or going to be in terms of capacity, once they figure out all the different systems to what the demand is. And so there's going to be a glut of supply. Everybody knows it's coming. And so it doesn't make sense for us to build production capacity inside of a greenhouse. It just doesn't make fiscal sense. It makes more sense for us to onboard licensed producers and train them for what we know. It took us 10 years to get good, but we can transfer that knowledge to our growers and make sure that they're actually providing products to us that meet the standards that we need in order to put it through the pipeline. So that's the first thing. The second is, I think on a global competitive basis, the field model is coming. We've seen, evidences around the world where they're moving products to field and plants, and now that legislatively speaking we can go to a field model, I think we're going to start to see more pressure to move to a field model, more of a pricing pressure to move to a field model, which will be interesting because we'll then have to think about how we still maintain those same standards that protect against pesticides and protect against molds and so forth as we push this get them through the plant, through the normal process. So I think that's going to change the landscape as well. So I think from a de-risking from an investor standpoint, we're not going to be the growers. We'll be the research to help them, but we're going to mostly buy from our growers and make sure we try to help them get there.
Sure. The first wave of LPs that spent tens of millions, if not hundreds of millions, on what is categorized as ultra high-tech greenhouse, purpose-built indoor growing facilities, or a variation on that theme. The stipulation was that you're never going to be able to grow indoors or outdoors what they can grow indoors in terms of quality and yield. And now that message seems to be sort of being pushed to the background as everybody rushes to embrace this idea of growing outdoors.
Right.
And so what is the reality there? Is there a difference between what can be achieved outdoors versus indoors, or is the difference not substantial?
Well, it's an interesting question, because on a herbal basis, if you're just using dried herbal product, the answer is the indoor material definitely has a higher octane or higher THC content than compared to outdoors. And the reason behind that is because when you're growing in an outdoor environment, there's all kinds of environmental stressors. There's more so than in a greenhouse or contained design build. So the stressors cause a plant to shift its energy and resources to maintaining its own homeostasis and everything else. So it pulls away from its ability to produce cannabinoids. That's one of the reasons, a little known fact when we got started. The national average in 2003 when we were asked to start supplying patients, or 2004, after the Hitsing case in the Ontario Supreme Court decision, and all of a sudden we were thrust into making product available for patients. We learned there was a report that was done and came back from the federal government saying that the national average was 9% THC across the board. This was actually done by the RCMP, collecting data from successful convictions when they were still testing for the concentrations. Well, the highest concentration was in Quebec, which had the mostly hydroponic indoor grows. The lowest, believe it or not, was BC, which had only 7% average in the province percent, which speaks to the fact that they were growing outside. So when you grow outside, the herbal material by itself is going to have a lower cannabinoid profile, lower THC particularly. However, when you're making derivatives and oil-based products, it's less of a concern because you're getting out the oils and you're extracting it, and you have to still bulk it up to a certain degree with olive oil or whatever you're mixing to bring it within line with concentration. So you leverage the field-grown material in through an extraction facility a lot better, right? So for the people who still prefer to vape it or smoke it, the connoisseurs are going to appreciate having indoor-grown material. The people who are doing for derivatives or anything like that, it's not as critical that it come from an indoor grow. It can come from an outdoor grow.
Okay, great. Well, Brent, that's fascinating. I'm excited for you and ZYUS, and I can't wait to see what you guys come up with. We'll leave it there for now and come back to you in due course. Thanks for joining me today.
Yeah, my pleasure.
Do you think that Brent is going to do it again?
You know what?
That was like that. He created $1 billion in market cap.
He did, eh?
Mind you, that was in the earlier days when it was a lot easier because there was a handful of companies relative to today.
Excuse me. Yeah, well, you know what though? You track record's important. You bet on guys that have done it before.
One thing I wanted to point out here, and I'm going to pull up my chart and assume that my NDI is functioning. I'm actually going to kill it, and then I'm going to restart it just to make sure. One of the companies that's come back to almost its IPO price, which is impressive considering its IPO price was eye-popping $25 USD per share when it came to the market. And it sold off. You could have bought this thing on December 20th for like 12 bucks a share, but today it's flirting with $25.
I know, that to me is mind-boggling.
And so the company I'm talking about, of course, is
Acres.
Is Acreage Holdings.
Right. Well, you got to say that was a successful IPO. Now, in retrospect.
Yeah. No, that was.
I mean, you could have freaked out. Early.
ACRG, .U, CNX. That symbol is really unfortunate too. I mean, it's hard to find, but look at that. Oh. Can you pull it up, please, Ed? Apparently the stupid new technology is once again disappointing us today.
ACRG.U on what exchange? CNX.
Yep, don't worry, people. One day we're going to have a real technology here as soon as we get rid of new tech.
Look at this.
Pulling it up now.
I'm going to put up a 1 month chart.
Pull it up to, yeah.
There you go, 1 month. Let's go 3 months. There you go. What do you got there? What do you got there? You got look at the red on one side, red candles on one side, green candles on the other.
Boy, that's some heavy technical analysis there, Ed.
So red, I think.
Pull us up some squiggles, will you? So what's going on there technically?
Well, I'll tell you what's going on. Ask me what's going on.
What's going on there, Ed? So
look, the thing came out, it shot up, and you did give you a little action right at the, oh my God though, but it went up there near the issue price.
Draw some lines, Ed. Nobody knows what you're talking about.
Well, okay, so it came out here, right?
Okay.
And the debut was not very
auspicious, to say the least.
It was down 20%. Yeah. And then it rallied up to just past the thing, but didn't stay there, big wick, red candle, and then dropped, attempted to get back up there and then failed. So we got levels there. And then this was, oh, painful. This goes from, obviously, this is basically the month of December. So now we get into the new year, and maybe this was a major tax loss candidate, and we've got this. And we got this over here and this over here.
Looks like tic-tac-toe to me.
There we go. Anyway, look, this is a stock. I haven't never traded this one, but...
You haven't never?
Well, I can't speak English very well either.
English and technical analysis RS.
Yeah.
But from a technical analysis perspective, I mean...
Look, if it can break the issue price,
yeah.
Whatever I've seen, big discounts to the IPO price, in this case 25.
Yes.
If it can get above that price, I mean, if you haven't sold it now, why would you sell it when it goes into a profitable state for basically everybody? Because it didn't trade before the IPO, did it?
Okay, so what's the market cap now at $25?
Well,
2 point some odd billion, right?
I'm gonna go in here.
The question is, my beef is that you've got these, so this is another one of those super voting structures where Kevin Murphy, the CEO, controls 83% of the votes.
Right.
So no matter what, it doesn't matter if he decides to go out and build ping pong tables, there's nothing you can do about it. And so the question for me is, like, if you've got these big, giant, monstrous things out there that are, you know, so he's building MSOs. He's got you know, growing capacity and dispensaries across states. But I just look at this relative to a business that's built itself organically, that has a much better valuation, you know, this just strikes me as one of those deals that's out there that's going to suck up a lot of the attention because it's got Brian Mulroney on its advisory board.
They can obviously move this thing. They can blow on it and move it, so it's attracting attention.
Yeah, but that's just it. If you can blow on it and move it, and it's, you know, it's you know,
according to this, there's only 21 million shares outstanding. I don't think that's right. I think there's a lot more than 21 million shares
outstanding.
Yeah,
that are not currently subject to escrow.
Yeah, I don't know. I'm just
no. There's I can't remember the number now off the top of my head. I knew the I read the listing statement.
Right.
But no, it's close to 100 million shares issued and outstanding, of which 21 million might be free trading now. I think that the IPO, they did $313 million at $25 a share. So that's the only stock that was free trading. So I find it interesting that even at that price, there was a whole bunch of willing sellers there who just said, screw it, I'm going to take the loss. I don't have confidence in this project.
Like, who buys these things and then sells them right away and loses money like this?
Drug lords?
Well, it says here under industry, drug manufacturer.
Well,
there you go.
I've been watching too much El Chapo on Netflix.
Oh.
Yeah. Anyways.
Yeah, you know what? Look, I think market cap is extremely important. Like in my world, you start talking about billions.
Yeah.
I'm not buying.
You're not buying.
Well, you can move it. You know, once you get into billions, how do you move the needle?
Yeah. Okay, tell you what, Ed, let's, there's a bit of a trivia type of question in the air. And here's
in your hair?
In the air?
Or did I err?
You erred on the side of caution. Now we're going to have a factoid.
What is the weirdest use of hemp? In 2012, archaeologists tried to find out how ancient people might have moved around Easter Island statues. The giant heads weigh in at approximately 9,600 pounds. That's 4.35 metric tons. California State Long Beach archaeologists turned to hemp for the answers. They attached 3 hemp ropes to a modern replica and walked it 100 meters in less than an hour, arguing islanders would have had the woody shrubs similar to marijuana plants for making rope.
Oh, hey. Afzal is with me. Afzal Hasan is the president of Origin House, formerly known as Canna Royalty. Afzal, welcome back.
Thank you.
Afzal, you guys put out a really interesting press release today that I was really intrigued by, because you've done two things. You've come out and said that you've been the subject of some, M&A activity that has not resulted in a transaction, and you also managed to get 26% of your shareholders to sort of pile into an agreement in principle. Tell me about that. That's interesting.
Yeah, and it's maybe one of the blessings and the curses of having a former securities lawyer as a leader in an organization. It's an area that I'm very well acquainted with. Some of my own background had a lot to do with M&A work, as well as proxy fights in particular, and hostile transactions. And we're in a very unique time in this industry where the conditions are quite ripe for this type of activity. So we had the good grace to have that knowledge and insight. We have great advisors too that have supported us through this process, and what we're trying to do is just instill a little bit of discipline into a very unpredictable market that we've got over here.
Sure. So is the purpose of the getting 26% of your shareholders to sign up to this agreement, is that designed to draw a line in the sand and let anybody who would contemplate that we've got 26% at least of the shareholders are going to be voting our way no matter what, so give that some thought?
Well, it's intended to signify a few things. Effectively for the market, it's intended to signal that you do have this core group of insiders and management in this company that is very much so subscribed to the long-term value of this organization. So it's 26%. It's obviously not 100% or 60% because we are a large publicly traded company, but it's intended to signal to the market that we do have that level of alignment and that we have a belief in the long-term value of this organization that may not be reflected for external shareholders. So that's the key uniting factor with these 26% shareholders. They're all internal folks. They understand and know this company better than anybody in the world, and this is intended to be a signal to the market that we really do truly believe in the value of this company in the long term.
That's interesting. Do the have the M&A sort of interest that's come your way, has it been from companies that are typically larger Canadian LPs or large multi-state operators in the US? Who's interested in taking over Canna Royalty / Origin House?
It's the usual suspects. I mean, we've got a very unique business model that's quite complementary to either one of those categories that you mentioned. So be it large Canadian LP or large multi-state operator, we're neither one of those things, but what we are is a very brand-focused and product-focused company, and that tends to be a big value driver, and the very reason why we chose this business strategy was because we thought it'd be very lucrative. So either category has been open for discussion.
Okay, so if I was, I am an Origin House shareholder. I'm looking at the, sort of the next phase here. You guys have accomplished great things, and that's why I'm a shareholder, and I'm happy to be a shareholder. What are the big events in 2019 that are going to take you to a new level? What is it that we should be looking out for as investors?
Well, California really has had a year of recreational market legalization so far, and this is the year that we expect to see a lot more of the development and maturity that we didn't see last year. And you always have a period where you need to roll out the kinks in the system. We still haven't actually implemented in California yet the final regulations. We've been on draft emergency regulations since the outset. So we're expecting to see some really interesting growth trends over here. And this sits on top of just the reality that the numbers for California were a lot lower than anybody was hoping. I think the estimates that I've seen estimated around $2.5 billion, which for most people represented a decline as opposed to an increase. And that predominantly, in our view, and from many other market commentators' perspectives, is due to the activity in the illegal market. So we're expecting to see a big transition over the next few years, and hopefully more sooner rather than later, from the illegal market to the legal market, and that's going to be a really interesting growth trend, similar in Canada as well. So we're expecting to see some of that. Canada, a little bit further behind. I mean, I'm frustrated as an operator in California that we only have 500 retail points of sale, give or take, but in Canada, it's under, I don't know what the actual number is, but it's definitely well under 100 for the entire country, and it doesn't look like that's going to be changing in the very near future. So I think that's going to be an emerging theme across the board for markets, is increasing maturity and activity, and really that's a great thing about being in this industry, is that growth is coming, no matter which way you want to cut it.
Yeah, you bet. So the California market is very mature, at least in terms of the producers and the product manufacturers. I mean, there's a ton of stuff down there. Every time I go, I'm always trying this, that, and the other thing, and so I'm curious as to, is there a period of consolidation coming in California that's going to see maybe some of the less dynamic brands sort of become folded into other companies? Is that something that has to happen for the health of the California market?
I think there's arguments to be made on both ends. Certainly for some types of business, you are going to see consolidation, because if you're trying to be the low-cost provider that's in every single store, that's going to be core to your business model. Scale and efficiency, it's an unavoidable drive that really drives that side of the business. That being said, there generally is going to be room for craft producers and smaller producers as well. The key thing to understand is that we just don't know where that balance is going to go, because we're exploring an entirely new market and have no idea how this could actually shake out. One thing that we have not yet seen happen, which is going to be really fascinating to see the effects of, is price rationalization. You've started to see that happen in Washington and Oregon and Colorado, where you've had long-time active regulated markets, which California has had more of a gray and fuzzy and unregulated market. We haven't yet seen California prices approach anywhere near what they are in Oregon and Washington or Colorado. So that is going to be a factor that's going to cause a lot of activity and likely a lot of consolidation too, and squeezing a lot of different business models.
You mean prices coming down?
Absolutely. And as the prices go down, you just have such a little margin to play with that it drives businesses out of profitability, and that's a big driver for consolidation too. You need to scale up to have the hope to be profitable.
Okay, and is Origin House in that position where it's got the scale that can withstand competition on price over time?
And that's the nice thing about being a distributor too, is that we're in a sense indifferent to that price movement. We're in a great position and a negative position in that our margins from our perspective reflect what the margins are likely going to be for our class of business into the long term. When we take a look at distributors in other types of businesses, our margins make sense versus what they charge. When you take a look at other types of product categories or other types of horizontals in the cannabis industry, so cultivation or retail or manufacturing, in many cases, you've had parties that have been able to extract above market returns for their activity. So if you're running a farming business, you're not there making 50 or 70% EBITDA on your business. That is just an impossibility. But that has been the case for quite some time in cannabis, and that is where you're going to see a lot of this activity move, is where you've had bloated margins in certain areas of the business just because of the historical evolution of this industry. It's going to start to compress and ultimately going to reflect what we see in any other business. Capital is going to go to the places where it's most efficiently deployed, and you're going to have returns generated for everybody. But nobody's going to be sitting there making odes and odes and odes of cash as you might expect to see just because it's cannabis.
Mm-hmm. So at this point, is there a sense of how much of the market is supplied by illegitimate sources relative to the legitimate ones?
Well, estimates down in the south, which is of California, which is where we tend to hear more of the illicit activity and see more of the illicit activity occurring, is that there were at points last year 3-to-1 retail outlets illegal to legal. So that was the reality that we had to grapple with. And it was frustrating because the legal dispensaries also, when they talked to us, they told us they weren't making any money, because most of the people that are coming in the door aren't making the huge purchases. They have a lot of their consumers price competing against the illegal market. And so the scale and the volume that the legal producers have been able to drive just hasn't been enough to eke it out for them. So it's a very challenging environment.
Wow. Interesting. So what in the grand scheme of things for 2019 is going to drive primarily Origin House's continued success?
Well, expansion. Expansion in California. We've been hard at work building an infrastructure and business over the past year that really is just getting onto its legs and starting to move forward. So what you saw last year was us putting together the business, but not really operating it because we were putting the pieces together. Now what you're going to see is us using those pieces to actually drive incremental and organic growth for our business too. So this is the exciting time, and the long wait that we had was to be able to plan and put this infrastructure in place. So what you're going to see in 2019 for us is execution in California, also execution in Canada with our partners, 180 Smoke, that we're well underway with closing an acquisition with. So a lot of fun stuff ahead in California and Canada, and we've definitely got our sights set on a vast number of other markets. Our point, though, is that whenever we go into a market, we want to make sure that we're doing it right and actually successful, as opposed to just being there and being a number on the license registry.
Sure, you bet. All right, Afzal, that's a great update, and I'm excited to be a shareholder of Origin House still. Thanks very much for joining me today.
Appreciate it.
Next coming up, we're going to have Ed is going to come back and do some technical analysis on some of our charts, and we've got the answer to our question of the day.
How confident in the economy are you? Do you think that there's likely to be a recession soon? And if so, why? And if not, why?
I don't think we will go into a recession. I'm pretty confident in the people that actually stand up for the government, not necessarily just the government taking control, but the people as well. So we'll try our best to push our government and get to where we need to be. Almost there.
Even if the guy downstairs decide to shut down the government or shut down the border and all that, it's kind of going to affect us somehow because our dollar is shit right now. But I don't see it happening. You know what I mean?
I'm not all that confident with the economy right now, given what's going on in the U.S. and the uneven and sometimes illogical decisions that seem to be being made by the president in particular. So I think those and the tariff war will ultimately push us towards a recession because it's been good for a long time. So I think we're probably due for one.
Wow. There's a recession coming, Ed. Are you ready? What are you going to do? You going to pull in your horns a little? Tighten your belt?
No.
Batten down the hatches?
My belt's already been tight.
Really?
Yeah. There's nothing
Nothing you can do?
No.
What are you going to do? A little less steak? A little more macaroni?
No, I'm not a big meat eater.
No? No. You look like a carnivore to me. Yeah. There you go. So you're a vegan.
You know, I like salads.
You like salads? What are you, a rabbit? Interesting.
Yeah,
interesting.
Yeah.
Cool. Well, so
I had a big salad yesterday.
Did you? What did you have on your big salad?
Just some romaine, red onion.
Oh yeah.
Celery.
You are a rabbit. Some of our audiences have some queries that we should address.
Okay.
And among those are, I saw an interesting question about canopy growth and had it come out of its rut.
Yeah. And
you made an interesting comment. You said,
well, if it was out of its rut, the question probably wouldn't have been asked. So you know, it looks like, you know, we've had a big correction here since we went public.
Yeah.
So not since public, but we went legal, I should say. And there's been a big drop. A lot of value has been evaporated.
Yeah.
You know, it's sitting here now the last 4 days. It hasn't been doing much at all, has it?
Not really.
I think if it doesn't start to go up, then it'll probably start going down again.
Yeah.
Well, if you've got, you know, if you're in this thing and there's, if you're in this investment, you know, you've had a hell of a run. Now, if you're still up a lot of money, you know, is it going to go back up there? Maybe.
Lazy Beats here would like you to do a chart on canopy.
Okay,
please.
I'll take a look. I mean, I'll drop chart.
See what you can do.
Okay, here we go. Yeah, it's a, let's see here. Okay, there, yeah, we got a 3 month, let's go with, since this thing's been around for a while. There's where all the action is. There's a 1 year chart. Okay, so look, we went into legalization. Right there. What? That's not what I wanted to do. Charts my
tough
way.
Time over there.
Jesus. Okay, here we go. 1 year. There we go. Okay, now, click. Now, screen sketch. So there's you got. This is a very prominent top. You got big red candles here. Trying to go through it, can't. The day it goes legal, we have a red candle, and it's been brutal since. We have a run back up here to almost where it breaks down, but below it. And then we retrace the whole thing again. I mean, it's easy to say this in retrospect, and now we're back into this area here. Yeah. So we've got this sort of big head. There's a shoulder and a shoulder, and if it breaks this sort of level in here, yeah, I think we're going to go back and test. And this is where was it here? This is the Canadian side. Yeah, this is just before they announced their deal. Well, so far it's holding, but
so they're not out of their rut yet.
I don't think it's out of its rut yet. I don't see, you know, and
how deep is the rut?
Yeah, the rut. What about the rut?
The rut is on. You know what happens when the rut is on? You stay out of the forest.
There's a deer population.
Well, that's just it.
I know.
The elk want to be a little bit too feisty.
The elk are going to look for some does.
And they have bad eyesight. And they can't really differentiate it between two-legged does and four-legged does.
Really?
Well, that's a theory.
Well, you're probably not far off.
Yeah.
Yeah, you know what, I'm not really bullish on the sector. I'm bullish on certain ones, but when the big ones are having trouble getting going, you know.
Want to take that call? I'm going to pull up the...
We're still on the show here, young fella. Anyway, that was
his time zones he's got his time zones all screwed up.
You know, there's a fellow Brit.
Yeah. Well, he's
a monarchist.
Well, he's probably from a British extraction. Okay, so I've got my NDI up, and I've got
you think Cunningham's a British name?
You know, well, that's just it.
I think you're right.
But he's from Penticton.
Well, you know.
So what's the deal here? Have I got NDI, Joy, or what? I can't hear anything.
You're trying to.
The voice of God has stopped. No. Okay.
No voice of God.
You're going to have to talk, Ed. I can't do anything.
We can. You know, we should show the short sell thing.
Oh, hey, that's an idea. Here's some interesting. You were wondering about the shorts. Well, here's the short. Here's the short and curlies on that.
Water.
Ed, been getting a lot of questions into the control room recently about shorting.
Sure.
So what is short selling?
Simply, short selling is selling something that you don't own. So you don't own it, and you're going to sell it. So that's the part. Then you're laughing. I know, because how can you do that? Well, you have to borrow it. You have to borrow this thing, then you sell it. So you borrow it, you sell it, and then if it drops and you're right, you buy it and pay back the borrow.
So you make money out of things getting worse.
Instead of buying it first and selling second, you're selling first and buying second.
Right.
So you're selling something you don't own. That's the hard part, right? How can you sell something you don't own? Well, you have to borrow it. So you say, Ed, lend me your shares of Apple. So I lend them to you. You, unbeknownst to me, you go sell them.
Right.
And I think, you still got my shares? You say, yeah, I got them. A week later, Apple drops. You go buy those shares at a lower price. You keep the difference, which is the profit, because you sold them high. You've bought them low. And you say, hey, Ed, here's your shares back. And I'm not the wiser. Does that make any sense?
Kinda. I'm still a bit lost.
Okay. Stay right here. I'll be right back. So right away, I'm gonna say, let's use an example of, we buy 100 shares of Apple, okay? And we pay $150. Then we sell 100 at 175. We make $25 per share. You got that, right?
Yeah.
Okay. So that's easy. That's easy. All we're going to do now is we're going to try and erase this. And we're going to start over. And I'm going to go to you and I'm going to say, you know, Mark, I think Apple's going to go down. And you say, well, I don't. And you've got some shares of Apple. And I'm going to say, lend me your shares. Lend me 100 shares. So you lend them to me. So I go down to my broker and I sell your shares, which I can do because you've lent them to me. It was as a genuine transaction. So I sell 100 shares at 175. A week later, Apple comes out with a terrible report, and I buy those 100 shares for 150, making $25, which is exactly the same thing. Only, the only thing I did difference here was I sold first, then I bought back, right? And then when I buy them back, I've got the shares back. I say, hey, Mark, here's your shares back. You got your shares back, and I made $25 a share.
Right.
And so you wouldn't borrow from me. You'd go to your broker and you'd say, go to the loan post and see if you can borrow me 100 shares of Apple. They will call their loan post. They have a loan post and they say, I want to borrow 100 shares. They don't care who it's for. They say, it may cost me, though. It may cost me 10% a year to borrow those shares because somebody has to give up those shares so that, but then they can come back and say, I want my shares back anytime.
So you can only do this if there's enough shares there for you to borrow.
Yeah, exactly. But trust me, you can go to any stock and say how many are short. There's a short report on every company.
Okay.
Like for instance, and it's publicized every couple weeks. Same thing. We both make. When you bought at 150, sell at 175, or if you sell at 175, 150, you still make 25. You can buy it first, sell it second, or sell it first and buy it second. It's just, all you're doing is reversing the buy-sell.
Okay.
And you can't really do it with illiquid stocks, and you shouldn't do it with really small companies, because small companies can explode to the upside. But companies that have exploded to the upside, chances are they're going to come back to earth. And that's where shorting gets interesting. That's why a lot of shorts have made a lot of money in the last 3 months once marijuana went legal. Aphria's gone from $20 to $8. So you could have sold, say you sold 100,000 shares at 20, and now it's 8.
I think I get it. I think I get it now. It's like watching a cooking program backwards, and you go from having a cake to loads of ingredients.
You sell it first and then buy it later. The difference, the big risk, of course, is if you sell it and it starts to go up, you've got to eventually buy those shares. So let's say you sell it at 175 and it goes to 300. Or let's say you sold Tilray. Remember Tilray?
Yeah.
It went crazy from $20 to ultimately 300. That was a short squeeze. That means that as it started to go up, the shorts had to cover, so they pushed it higher. They weren't buying it because they liked it. They bought it because they had to. That's called a short squeeze.
Okay, so I think I have a grasp on it.
A grasp?
Do you know what? Maybe not a grasp. Maybe I could get a short squeeze on it, Ed.
Short squeeze?
A short squeeze.
You want a short squeeze?
Short squeeze. Bring it in.
Short. This is very short.
Bring it in.
Very short. Very short. Jesus.
That was awkward.
Jesus, that was awkward.
Wow, that's quite the tutorial you gave.
Yeah, that's quite good. I like that tall guy. Jesus.
Yeah, he liked you too.
What does he look like?
I don't know.
The man with
pretty tall though.
No face.
I didn't realize you were so short.
Yeah, I'm a bit of a shorty pants.
Is that why you like to go short? Because it's just like a
yeah. He would like to go long. I would like to go short. There's a little symbolism there, obviously.
Yeah. Wow.
Yeah.
So, have you had any good experiences going short?
Yeah.
Yeah?
Oh, yeah.
Tell me about your worst one.
One of the worst ones this year, a year ago, is I shorted the GET at around 250.
Oh, yeah, that should have been your first clue. If the symbol's get.
Get out of this.
Get short.
Get out of this. Get shorty.
Get shorty.
So that was bad. But I years ago when I was a big shorter, I actually shorted Nortel. And it went to zero ultimately, but I actually shorted it and lost money. It's all about, how much do you short? Can you handle it? But, guys like that are too aggressive, that think they know everything, like I did back then. Maybe I still think I know everything now. At the end of the day, you can't short too much, because if it starts to go against you, it's very nerve-wracking.
Yeah.
Because it's going up, and you think, shit, what if it goes up forever? Like, there's no end to the up. At least with down.
So if you're short a position, so I'm going to go short. I'm going to borrow 100 shares off of Mark of Apple.
Yeah.
And I want to sell it short, but as soon as I borrow it, the stock takes off to the north, going up in price. So my short strategy idea is shot from day one.
No,
my choice,
but you haven't shorted it yet. You just borrowed it.
But I borrowed it. So I'm paying, this is one of the things that I didn't see in there, I'm paying an interest rate to borrow that stock, which has to go into the equation of estimating my win.
Right, but if let's say you're borrowing at 20%, short strategies are usually a strategy that you're going to, you're not going to stay short for a long period of time, I don't think.
Right, but if I borrow the stock, and the stock starts going north, then I'm paying 20% per annum,
which is
amortized out over 360 days. But I'm losing money. I'm losing 20% per day while I'm waiting for that stock to.
20% a year.
I'm using 20% per year while that stock is going up. Until it goes like, so what are my options here? I can't sell it.
I shorted a stock today and I covered it today. I didn't make a lot, but I made some money.
Yeah. Okay. So, but it went down.
Yeah.
So my point is that if you borrow some stock thinking that you're going to sell it short and it goes north, what then?
Well, short it when it goes up. It's even a better short.
Well, then that's going long.
No. If you sell it, like let's say
short it when it's going up.
Let's say you borrow the stock and Apple's $1.75.
Boy, the Anson funds guys must be just roaring on the floor right now.
They're just howling. They're going to say, "Get that Ed Milewski over here."
That's right. Tell everybody that this is how it works, so we can blow out all of our paper. Yeah. Oh man.
So if you shorted it, let's say you borrow the Amazon and it goes up.
Yeah.
You haven't done a thing yet. All you do is you're on the hook for the interest on the borrow.
Yeah.
Let's say it goes to 200 and you say, "Hey, I'm going to sell it here at 200." So you short it. You call up your broker. He's already borrowed it. It's sitting there. Hasn't done anything. You sell it at 200. Then the bad report comes out. It drops to 175. But what if it goes to 2.25? Then you buy it. So you lost 25.
Yeah. Okay. So that's the downside about shorting.
Shorting is
just as you can be wrong about a short going higher or a stock going higher when you go long, you can be wrong about a stock going lower when you go short.
No, shorting's not guaranteed. It's the same thing. I'm not trying to make it sound like it can't.
So when these guys,
here's an idea.
When these guys at Heidelberg, I ain't going to be shorting anything. Troy Smith says, good call, Troy.
Well. But
shorting is fraught with peril.
I was involved in a deal. I never shorted it, but it went from basically nothing to $10 and back to nothing. And there was I think the Anson Group was involved in this on the short side.
Oh, is that? Don't tell me. Sphere 3D.
That's correct. yeah.
Went to $14.
10.
Oh, went to 14.
No,
didn't it?
No.
Pretty sure.
I know. I know. I was.
Yeah, the Anson Fund was behind that, all right.
Oh, big time. And look, the thing's now zero.
That's why if you're into financing,
have you ever shorted your broker? Have you ever shorted your pants? I've shedded them. No.
So if you're into financing, and you should ask the broker, say, is Anson Funds or MMCap in this deal? Then you don't want to be there.
Look,
you're going short.
You short things that have a lot of shares and an unbelievable market cap, especially when news comes out and the news is good and the stock can't go up, because then it's reached its sort of, it's an aggregate that, things can only how high can they go? Nothing goes up forever. Nothing goes up forever. Nothing ever will. The only thing that goes on in one direction is time, that I know of.
The arrow of time, always moving
Tempus
forward.
Fugit.
Never goes backwards.
Well,
when you say let's go back in time, you're full of shit there.
Yeah. Huh. But you could argue there is no time.
iAnthus closed up 17 cents to 607.
Yeah.
Juju, our erstwhile hard done by boneheaded pick of 2018 is up to 10 cents. You still own it?
No.
I do.
No. I listen, I went in for a trade, I smelt the move, and I was in and out, left a lot of money on the table.
Not me.
You were in and out, and then you went back in.
Yep. I drank the Kool-Aid.
You went back for a second cup.
Yeah, I'm still drinking the Kool-Aid.
Well, I did that mistake long time. I've done it so many times.
Yeah.
In and out, and then take it off your screen and move on.
Liberty Health Sciences, there's another one, closed up 4 cents to $1.06. Clearly, not a very successful strategy on the part of the Hindenburg. What is it? Hindenburg,
the
short guys,
named
and the
after
QCM guys.
The Hindenburg disaster, right?
Yeah. Giorgio Del Vione wants to know, what do you think about Texas legislation and village farms? Those are two different things. I'm out even from Texas, and I know that's them two different things.
Well, we were talking about village farms, and we asked if they were run by the village people.
Yeah, that's right. And turns out they're not.
YMCA. That was quite catchy back in the day, wasn't it?
Yeah. Yeah, it was quite the thing. So Citiva is a beast, some people are trying to tell us here. Citiva. Pull up a chart on Citiva.
What's the ticker?
SNN on the CSX.
Okay, let's do it. Let's do it right now. Let's do it. Do it. Citiva.
Drum roll.
SNN. You're making me very nervous. Jesus. Oh yeah, look, wow.
Oh.
Wow.
Pull up that chart quick, Ed.
Okay.
This is our last move of the day.
Okay, you know what? I'm gonna just focus on this last little. Okay.
Free overtime.
Now look
here.
at this. 3 months. Now there you go. So we've had a correction from about 580. Click.
Oh, Ed's NDI is off. Anyways, we'll take a look at it.
What do you mean? What?
Sorry, Ed.
No.
That's it.
No, I'm
4:30.
staying. I'm staying.
We're back tomorrow. Don't forget to,